For the disconnect today, joining us now is Abhay Deshpande, Chief Investment Officer for Centerstone Investors. Abhay, is the tail still wagging the dog here with yields and the Nasdaq and tech stocks, or is there more to it?
Yeah, I mean, there's always more to it, right? And so I think in this case, maybe there's a couple of things that are happening. One is that the economy's opening up, and that's really the main thing, right? The economy's opening up and it's pushing yields up because there's expectations of inflation, all these bottlenecks everywhere. And at the same time, the stay-at-home trade is people are rethinking that because of the obvious consequences of opening up the rest of the economy. So what looked like a one-to-one sort of correlation, that as bond yields go up and Nasdaq goes down, I think those are actually separate things. They happen to coincidentally be related, but the main the common thread is the economy is just opening up. So you can actually have, and probably will have, scenarios like this that we have today, where rates are flat, the Nasdaq is weak, and vice versa. The things that will drive interest rate trends don't always drive stock trends. For instance, the long bond market can be manipulated by the Federal Reserve.
Right.
And there can be bubbles in stocks, which we've clearly had for the last few months.
So speaking of, you guys at Centerstone focus on value. You're global in your view. So yeah, things are opening up, and so one might think, let's look at the sorts of companies that are going to benefit from that. But a lot of those companies have had a nice run already. So how do you determine where value is within that cohort?
Yeah, I mean, they've had a nice run from 60%, 70% off, right? I mean,
right.
Frankfurt is a good example. That's an airport operator in Frankfurt. You can guess what happened to the stock. It went down a lot, but it went from 100 to 30, and the stock's trading at 50 now. I can make a good case that there's a lot of value there, well in excess of the current stock price, just the asset value. And that's what's wonderful about value investing is we don't have to look about 20 years down the future about what battery demand is going to be or whatever electric car demand is going to be. Value investing is about the here and now. It's the bird in hand versus the two in bush. And there's a lot of birds in hand potentially right now in the value space, despite this big run up from the last 6 months or so.
Shepard Smith here. Thanks for watching CNBC on YouTube.